I'm Michael Masterman. I'm the chairman of WRES, and thank you for all attending this prestigious conference. I'm very glad to be invited. WRES is 100% in the Iberian Peninsula, that's Spain and Portugal, and I wanted to introduce you to our company and all the things we've been doing. Just to start off, that's the first blast at the La Perilla mine. That was in July. That blast freed up about 60, oh there you go, it's a blast. That blast freed up about 65,000 tonnes of high-grade ore at about 0.15% WO3. That was in July. Today, we're actively producing tungsten concentrate off the shaking tables. You can see the beautiful tungsten coming off there, and the nice tin in the form of cassiterite also coming through there. And this is a bulker bag that's collecting what should be the first of our first 10-tonne shipment that we're building up for export to our customers. So we've had a very good 3 months, and it's great to be in production. The team's worked exceptionally well to achieve this, and I'd like to tell you a little bit about our story and how we've got to some of these great milestones tonight. As I said, we're focused on Spain and Portugal. The mine and that deposit that you just saw being blown up is the La Perilla mine here north of Seville. It's about a 2.5-hour drive north of Seville. We also have in northern Portugal the WRES project, which is about an hour and a half's drive east of Porto, which is also a very advanced development, and we're moving quickly to put that into production. And in central Portugal we have some very, very good gold and copper projects, which add I guess a very substantial dimension to all the activities of the company. So I'll talk about the tungsten, and seeing it's a tungsten and gold conference, we'll talk a little bit about the gold as well. What does all of this look like in terms of global tungsten? So what we're going to do, and you've seen us achieve a lot to date, but what you see us achieve over the next 3 years is going to take us to being one of the largest producers of tungsten globally. The first step involves putting La Perilla into production at 2,500 tonnes per annum. The production announced today is the first step in that, and by mid-2017 we'll have the plant capacity in place to produce at 2,500 tonnes. Following that, very closely on, will be the development of the WRES project in northern Portugal. That's a very high-grade project. We have a very lean and very effective development plan for that, and that'll add another 1,300 tonnes. We'll then move to stage 2 or 3, depending on how you count these things, of La Perilla, which will add another 2,500 tonnes. And we've got this very, very high-grade, fairly sexy project about 20 kilometres south of WRES in northern Portugal called Tarouca, which I think will add some very nice tonnes to as well. So that takes us to around 6,300 tonnes per annum of tungsten production. Let's put that in a bit of context. There's a mine called Nui Phao, which is owned by a very big Vietnamese company called Marin in Vietnam. They're quoted, and their logo is the world's largest tungsten mine. They have a market capitalization of over $400 million US, and we will be, in this schedule of development, producing in excess of what they currently produce to date. So what we're talking about, the assets that we have in our portfolio, are very much world scale. They're also very low in capital development costs and operating costs. Overall, if you look at where we're heading, La Perla, as it currently stands, has a net present value of around about 110 million. Per share, that's around about 2.4 pence per share, many times the current level of our current share price. Tungsten and tin in particular over the last 3 months are in an upswing. Tin is a scarce commodity. It's traded on the LME. We're seeing very, very significant upside in that space at the moment, so keep an eye on that. And on our ore body at La Perla, there are very, very significant lateral extensions of the ore body. They're going to see a 51 million tonne resource expand quite dramatically, both in terms of grade and size over the next 6 to 12 months. To achieve all we've achieved, and we've got a hell of a lot more to do over the next 18 months, we've had to have a really good team. This is the team at the time of the blast, and you can see the ores settle down nicely after that blast we showed in the introduction. Couple of key people, but you know, all of these guys are key people. Fernando Lafluente, Phelps Dodge, Anglo-American, Rio Tinto. Rio Tinto had an option over the La Perla mine. Fernando was the geologist who was there supervising Rio Tinto's evaluation of that project for 1 year. He saw the mine in full operation. He had full access to every micro bit of data available, and he is one of the strongest believers and strongest operators, and is a country manager in Spain. Another key guy, he's a fairly cool dude in the Panama hat, Celestino. Celestino's a mining engineer. We agreed as a team to do that blast and get ready for mining 6 weeks before the blast happened. It was executed flawlessly, high levels of safety, high levels of execution, drilling completed before it. When you develop a mining project, you've got to have a team of people who are able to get things done, and get things done quickly, decisively, and at very competitive costs. And that's what these guys are about. On the financing side of things, and I know many of the shareholders have had this focus, you know, what's the financing? How do you do it? How do you do it? When are you going to do it? We've got a lot of experience there as well. I've been involved in a number of very large-scale resource developments, but from companies that started with $5 million market capitalizations. The Fortescue Metals Group, or FMG, was a $5 million company in 2003. It's now worth $16 billion, and it's by far and away the best performing stock on the Australian Stock Exchange this year. The most recent transaction I was intricately involved in for Fortescue was to sell 31% of that magnetite project in the Pilbara for $1.2 billion that fully financed the development of that project. It was executed and built in 9 months. So that's the kind of financing and that's the kind of execution that we're looking at. The other project was the Marin project. That was a $1.4 billion nickel mine development. We brought Glencore in, and this is almost ancient history in the time, with a 40% share for $220 million. We did the first ever US capital markets issue to raise $420 million for the development of that project, and Glencore currently owns 100% of it, and it's one of the 4th largest nickel mines in the world. So we have the skills, experience and exposure to finance projects of this comparatively smaller size, cost effectively, and most importantly, with the best returns to shareholders. It's always, you know, a skill to make sure that you get it financed, which everybody worries about, but also to get it financed in a way in which the existing shareholders, and hopefully there are many of you in the room today, get to participate in the maximum upside from the development of the project. And that's the needle that we've been focusing on threading. And we've had really good success in the last 3 or 4 months. The development cost of the project is 17 million to take us to 2,500 tonnes per annum of tungsten concentrate. We financed the first stage, and you've seen the production coming through today, by selling forward our concentrate to one of our US customers, where they advance us 1.2 million, and by entering into a equipment lease with that same customer. That's got us the first 3 million of financing very efficiently. The second phase of the financing, and we're seeing the advantages now of being able to finance in what's still a recovery market in metals. All the suppliers of crushers, jigs, mills, and all the other equipment necessary to finance a mining project don't have much work. Their factories are empty. But the ones in Europe are sitting there with finance costs from their banks at around the 2, 3, 4% mark. And they want their employees to have the jobs. They want to supply first-class equipment to projects like this. And so we're able to structure and put in place equipment finance deals. Think of a car lease. You install the equipment, you pay for it over a period of time, your effective interest rate is low and takes advantage of short schedules for construction, low interest rates in terms of financing. So we've had a hell of a lot of success in that vein, and that again is adding a hell of a lot of value for our shareholders in terms of finance execution. The other key bows to our bow, or arrows to our bow, are the joint venture finance and customer finance. We're seeing exceptionally strong appetite for our tungsten concentrate from Europe and America. We're taking advantage of that in our financing structures, and that's making and going to make a significant positive contribution to completing the financing. We might be a little bit slower than some of our shareholders would like, but if with perseverance you can make sure you get first-class European equipment for your plant, and you can get the finance together with it and still meet your schedules, well, I'll be a bit more patient in getting that finance in place, and that's where we've been kicking a lot of goals recently. So finance is getting there strongly. We're in production as a result of it, and we will put the finance in place to take us to that mid-2017 target of 2,500 tonnes per annum over the next couple of months. What's involved? We've just financed the first stage, which gets us to 400 tonnes per annum. The next step is 14 million of finance, which includes the crusher that we've financed and will install in January and February. And there is a further stage that takes us up to 5,000 tonnes per annum that puts us very much among the leading global producers of tungsten. This combination, this amount of capital expenditure, delivers two things: very, very low unit capital costs. We can generate these tungsten units far lower than anybody else in the industry on a unit cost of capital basis. And we end up with very competitive, very low operating costs. So it's a unique combination. We can go into production for low capital costs, but we can deliver very low unit operating costs in achieving that. So that means tungsten price is low, tungsten price is high, we're competitive and profitable. So why can we achieve these very, very low capital costs? Well, the first reason, and I had a big North American customer to site about 2 or 3 weeks ago to witness that blast, and he got off the main highway from Madrid to Seville, had a cup of coffee, and he said, well, how long is it going to take us to get to the mine site? I said, 5 minutes. He said, the last mine I went to was in the road of, you had to travel down the road of death in Bolivia for about 9 hours, and you didn't know whether you were actually going to get there. So he was amazed that we had, some of the best infrastructure in the world in that highway from Madrid to Seville, sitting 5 minutes drive from our mine. Franco also, General Franco, if those who have a good fix on Spanish history, built this beautiful water channel all the way to the dry lands of Extremadura, and that is about 1 kilometre from our mine site. So we have an unbelievably good location, which means that huge amounts of capital just melts away in terms of being able to execute this project. We also have a large amount of the infrastructure built and operating. When we got the tailings up and running, we got a power grid connection, and we pay Iberdrola 10 cents per kilowatt hour for that power. Very low cost. We have the accommodation, the labs, all the infrastructure sitting there. In most mining projects I've been involved in, the infrastructure itself usually costs 60 to 70% of the costs of actually getting up and running. Ours is already built and fully functional. The third thing we have is we actually have the concentrator in place. The great thing about the ore at La Perula is its coarse grain scheelite. We have simple gravity separation through spirals and then shaking tables to get to a high-grade tungsten and tin concentrate product. And there's nothing like a simple process that relies on principally gravity to produce your end product. So that concentrator's in place. That concentrator is what we're using to produce what you saw in the earlier pictures. And one of the great things about what we've achieved in the last couple of weeks is that this concentrator is operating at a really great level of stability and steady operating performance, which if you can get a plant operating early on in the startup at that kind of level, that makes a huge difference to the subsequent success and economics of your project. Okay, so what's going to happen next? What we need to do, and this is financed, is we're installing a full-size crusher. That will significantly drop the operating costs of our current operations. That's scheduled for January, February. And that takes us to the 400 tonnes per annum capacity. We then install a new jig and a mill. This ore works very, very well through jigs in terms of upgrade. That's a package of 4.5 million. We are very advanced in terms of equipment financing in terms of that package. That step takes us, and we upgrade the concentrator. That step takes us to 2,500 tonnes per annum. To kick up that final step to 5,000 tonnes per annum, which really takes us to being a very large global player in the tungsten market, we add an expanded crusher, and we add ore sorters. Ore sorters I saw in the previous presentation are contemplated. Ore sorters basically use X-ray technology, a little bit like when your bags go through the airport, scanners to pick out what's, in our case, heavy and got tungsten in it, and separate the waste. Very efficient. Some test work we need to do there, but it's a very efficient way to lift the overall capacity of our facility. What does all that translate to in terms of earnings and profitability? And we are very much focused on where we get to. We're looking through each of these steps at taking our profits up to around about 55 million US dollars of EBITDA, earnings before depreciation and interest. That's a very high level of earnings for what's currently a £20 million market cap company, and it's what we're focused on as a laser to achieve. There's a number of steps that we have to execute successfully to get there, including the financings that I've mentioned and also the other steps along the way. But we have the resources and the potential sitting within what's approved and in the process of being developed to generate that kind of earnings capacity, and that puts us right up among the mid-cap companies listed on the AIM in the London Stock Exchange. Depends on price. Our financing and our continued operation doesn't, but price makes a big difference to the amount of earnings that we generate. I think we've got nearly exactly the same price projections as Thor, but most of the other players in the industry are also looking at strong price recoveries. Two reasons, just to add to the comments before, that we expect tungsten prices to rise strongly. One is nobody in North America currently produces tungsten. The falls in 2015 knocked out most of the production in North America. The Frank Dodds Act, which made it incredibly difficult for mines in Africa and also South America to sell into Europe and the United States, knocked out huge amounts of the market. So you have had a very sustained reduction in the amount of supply in the industry over the last 18 months. That will feed into much stronger tungsten prices. The European customers, the American customers, give them the choice of buying from a great stable mine in a first world country like Spain at competitive prices. They'll buy from us every day of the week, as aside from buying from China. So very competitive location and a very competitive market. Tin. Tin's currently about 20% of our revenue. Nobody has been building tin projects. Tin is very critical for all sorts of technology sectors and things like that. We've seen a 20% rise already. I think it's up around $19,000 a tonne. It's going to go through $20,000 a tonne. And what we're finding is increasing percentages of tin throughout the deposit, particularly in these new outcropping areas in the what we call the South FTM area. So tin is a very important LME traded metal that's going to make a big difference to the earnings and profitability of the company. Costs are important. Overall, we're looking at a cost structure of around about $81 per MTU. The current tungsten price is around about $200 per MTU, and we achieve that on a sustained basis through the life of the mine. Our startup year is 2017. Startup years, you tend to get higher costs as you're commissioning, ramping up, dealing with all the scale issues that you need to achieve. But one of the things that is really standing out from the work that we've done to date, particularly on the drilling, is we're seeing more and more higher grade tungsten and high grade tin outcrops sitting at the top of the mine. These weren't built into these cost structures. They will be as we get the assay results back, but from everything we're seeing in the initial years in 2017, 2018, we're going to see higher grades, we're going to see lower strip ratios, and that's going to translate into a really good base of ore to start this mine on. And these are the areas where we're starting to see it. This is the pit, which was previously mined. This is where we're going to mine now. We thought the pit finished here. In fact, we're getting our best grades right through here. So we've got a very substantial southern lateral extension in the ore body. That's going to translate into a larger pit, longer mine life, lower strip ratios, and very importantly, lower costs. But in terms of our immediate future over the next 18 months, it's going to allow us to take outcropping ore, some of which is sitting at 4 times the average grade of the mine with much higher tin, into the plant. And again, if you want to start a mine, if you're able to start with an open pit mine, no cover, outcropping ore, and get it into a plant that you've proven operates very well in terms of gravity separation, that's a great place to start. So that's La Perla. Next off the worksheets, and I won't spend a lot of time on this, is Regoa. Regoa is in northern Portugal. It looks a lot different from La Perla. It's higher grade. We're looking at a very capital efficient startup to take Regoa to 1,300 tonnes per annum in 2018. We're able to achieve that because the ore is in these high grade skarn veins that are almost horizontal to the mountain in which they're hosted. So in our mine plan, we're able to move into the ore body using horizontal adits, for those who are mining engineers, where you basically drill using jumbos into each of these horizontal ore zones, and you're spending your mining effort going straight through higher grade ore. We've done the optimization work on the mine planning. It's highly efficient in terms of ore extraction and mining costs. So our development plan is quite straightforward. Mining with 2 underground adits, accessing 0.4% tungsten at around about 100,000 tonnes of feed. Up the road from us, courtesy of the European funding of Portuguese mega road projects, there's a beautiful existing crushing plant that has waste disposal facilities. We have access to that and we'll use that for the crushing. And then we need, from all our test work, a relatively straightforward spiral plus shaking table system to take that into high-grade tungsten concentrate production. So very high grades at Regoa, very low capital cost to put in production. It'll follow quickly behind La Perla. So that's where we are on the tungsten. I can't come to a gold and tungsten conference without talking a little bit about gold and copper, if I may. Central Portugal, we've got a really, really good portfolio of gold assets and copper assets. I dare say if we added these into Metal Tiger's portfolio, there'd probably be an extra 20 million added to Metal Tiger's portfolio. And we're kind of working out how to, not to put it into Metal Tiger, but we're working out how to add that 20 million to our own market capitalisation. On gold, the resource, JORC, is currently 110,000 ounces. To get there, we basically took the old drilling and worked up a JORC resource estimate. That JORC resource estimate highlighted exactly where we need to drill to significantly increase the size of that gold resource, and we will shortly start that program. We have the São Martinho, which is Little St. Martin, for those who speak Spanish, deposit, and we also have the CAA deposit, which also has some exceptional intersections. So gold is going to build and become quite substantial in terms of our advanced project base. We also had not one, but 2 copper mines added to our portfolio with the recent grant of the Tinoco exploration licence. Both these copper mines, Tinoco and Zetilios, were mined successfully. The drilling results that we have access to have grades of 2.5, 2.6% copper. The best place to find a new copper mine is near an old copper mine, and we are very, very pleased to have a license of this size with these kind of existing resources added to our portfolio. Watch this space on the copper and the gold. Tiny bit more on São Martinho. These are the licenses, so they're adjacent and they're very large. We're currently sitting at 110,000 ounces. I'd like to take this up in steps. First target 250,000 ounces from our near-term drilling program, and then longer term we have a target of 1 million ounces, which is significant. Copper, early days. We were only granted the license a couple of months ago, but I've been pushing our geologists while we've got the drill rig out at São Martinho to actually put a couple of holes in Tinoca, because this is a very large license. It's got outcropping copper. It's got very, very good grades, and if we can string this together, we've got the potential for a fast-track copper mine as well in our portfolio. So why W Resources? Firstly, we've got two tungsten mines in our portfolio. They are both advanced development. They're both, La Perla is producing and Rego is following quickly behind. And we have exceptional exploration acreage, particularly in gold, particularly in copper, and also in Tinoca, which is south of the Rego deposit. We're actually, it says targeting mine production in 2016. We do have mine production in 2016. We do have Rego advancing towards production in 2018. The exploration potential within our existing portfolio of assets is exceptional. We think tungsten, tin, and we also think copper are going to recover very, very strongly into the market. And we're looking for all the ways we possibly can to deliver this value that we're going to generate back to shareholders. Thank you very much.